My name is Martin Boucher. I'm a faculty member here at the Johnson Shoyama Graduate School of Public Policy at the University of Saskatchewan, located on Treaty 6 territory and homeland of the Métis. This renewable energy conversation discussion series is about reaching for and being leaders in creating a sustainable future for all. By joining today, you are engaging in ongoing efforts to connect and mobilize renewable energy cooperatives here in Canada. This builds up on recent work that myself, Marc-Andre Pigeon, and Renata Leonhardt have done on conducting a census of renewable energy cooperatives in Canada, which I'm certain will be shared in the chat soon enough. That census helped us to identify renewable energy cooperatives across the country and outline their success and challenges. Challenges included scaling up and playing a more prominent role in the energy sector. Building on that insight and the census work, this discussion series was created to explore how renewable energy cooperatives can make a more meaningful and timely contribution to Canada's efforts to achieve net zero greenhouse gas emissions by 2050. Each installment of the discussion series will be held on the third Wednesday of each month between now and May at 12 p.m. Sask time. The sessions are on Zoom, free to attend, open to anyone, and recorded. They are also posted on our YouTube channel, the Canadian Centre for the Study of Cooperatives YouTube channel. So cancel your Netflix subscription and sign up for that YouTube channel and watch reruns of our Renewable Energy Cooperative discussion series. The discussion series is also important because it's not just a discussion series. It very much leads into an in-person gathering that we are having in May 25th to 27th at St. Paul's University in Ottawa. At that event, we'll put the ideas from this discussion series and the insights that we've heard both from our speakers and from the participants, and to see if there's an appetite for the sector to do one of the things that cooperatives have always done to build scale, which is to collaborate by forming second-tier organizations, sometimes called a league, a federation, or association, to provide important shared services. And that has been very much the theme of this discussion series. And that's what all of this will culminate to, is our event in Ottawa. Some special thanks to a few organizations that are providing financial and in-kind support to these ongoing efforts that include Cooperatives Insurance, Cooperatives First, Alberta Community and Cooperatives Association, British Columbia Cooperative Association, of course, the Canadian Centre for the Study of Cooperatives here at the University of Saskatchewan, the International Centre for Cooperative Management at St. Mary's University, Royal Roads University, Cooperatives and Mutuals Canada, and last but not least, the Social Sciences and Humanities Research Council of Canada. So we have a lot of wonderful partners and support for this project. So let's turn to our speaker today, Stephen Irvine. He's going to talk about scaling cooperatives through multi-sector networks. Last month, we heard about ResCoop and their approach to scaling up by forming a second-tier organization. We're going to learn about multi-stakeholder networks in the context of the Colorado solar energy industry. So by a very short background, because I know Stephen's been a very prolific and busy person in the last while. Since its founding in 2011, Stephen has led Amicus Solar Cooperative, a certified B Corp and Colorado Public Benefit Corporation. Amicus is the first purchasing cooperative in the North American solar energy industry. Stephen has also co-founded the Amicus Operation and Maintenance Cooperative, a resource sharing cooperative focused on long-term operations and maintenance of solar energy systems. In addition, he was one of the founding committee for the Clean Energy Credit Union, a federally chartered credit union and financial services cooperative. Currently, he also serves as a board advisor to the Kucha Impact Fund, an investment cooperative and public benefit corporation focused on owning and operating impact real estate and investing in privately held impact companies. Stephen led the creation of Amicus Solar Cooperative while serving as CFO of Namaste Solar. I'm getting tired just listening about, mention all the things that you're involved in, Stephen. And we're going to hear about it shortly. But before we do, much of what we're going to hear about from Stephen is also represented in a really great research paper that shares the title of this presentation, Scaling Up Cooperatives Through a Multi-Sector Network, a case study in Colorado solar energy industry. So if you want to dig into the details and get a bit more of an insight to some of what Stephen's bringing up today, I would really encourage you to take a look at that paper. It was published in the Journal of Entrepreneurial Organizational Diversity by Julia Rodriguez and Nathan Schneider. So without further ado, I'll pivot real quickly here to Stephen. Our format is simple. It's been what we've been doing for the last few months, 20-minute presentation by Stephen, and then we will go and have some breakout sessions where we'll hear a little bit from you. Again, all of this culminates to our Ottawa event in May, and we use some of the insights from our speakers and the breakout sessions to really inform the approach and what we want to accomplish in that May session. So enough of me yabbering. Let's turn it to Stephen to share a little bit about multi-sector networks. To you, Stephen.
Yeah, great. Thanks so much, Martin. And pleasure to be here. And thanks everyone for having me. Yeah, all these cooperatives, as you can imagine, it's a group effort. So I'm one of many people involved in this, and you'll see a lot of the names. If you look up that paper, you'll see all the individuals who are involved in creating all these different cooperatives that are working well together. So let's see, can everyone see my screen? Yep. Okay, great. So I'll start with Namaste Solar. So this business was started in 2004. It's a solar installation business, PV system initially designed. We started the business in Boulder, Colorado. It was right after the state of Colorado voted in a renewable energy standard. So this allowed the investor-owned utility here to offer rebates for homeowners who were going solar, right? And we thought, great, this is a good time to start a solar installation business here, especially in Boulder, where, frankly, the demographics were perfect for solar, right? It had, at the time, solar was very expensive, even with the rebates. So it did have a higher household income levels, had higher education, and very environmentally focused community, right? So we started that in 2004, and we started Namaste Solar as employee-owned from the get-go. So everyone put in as much money as they could, all different amounts. Nobody owned majority of the business, and we were essentially just a C corporation with a restricted stock plan. We didn't know about worker-owned co-ops at the time. We had then discovered through just our own networks a company called Equal Exchange, which I bet many of you know. It's a worker-owned co-op based out of Massachusetts, doing fair trade coffees and chocolates. And they really inspired us because we had already operated and had always operated as a one person, one vote. But we just all owned different percentages of Namaste Solar. So we decided to fuse the governance and the capital structure, right? And voted to convert to a worker-owned cooperative January 1st of 2011. Since then, we have grown the number of co-owners, and each co-owner invests $5,000 to be a member owner of Namaste Solar. We make it where that $5,000 can be, paid for over 4 years with an interest-free loan. So it's kind of like a little deduction from your paycheck, and that worked well for all the different salary ranges. Even the newbie installer on the roof earning $20 an hour. It worked out where it wasn't too big of a deduction from their paycheck for them to participate in the co-ownership of Namaste Solar. So now there's over 200 folks on the team at Namaste Solar, and more than half are co-owners or worker owners of Namaste Solar. Around 35 million in revenue now. It's grown over time. And out of the 18 years in business so far, we've been profitable 16 of those. The main capital sources, right, to get going have been that common equity in those 5,000 units of common stock, and then also Equal Exchange inspired us with this ability to have our own private placements offering preferred stock. So this is non-voting, non-controlling preferred stock with a target dividend. And we set the target dividend at 6.5%. And it's non-cumulative. So if one year we couldn't pay the 6.5%, that didn't mean in the following year we had to make it up, right? But this attracted a lot of investors who are really interested in supporting cooperatives and also obviously solar and the way we did business. So it allowed us to stay in control of our own business, right? Control our own destiny, keep that special DNA of employee ownership, and allow us to grow the business and support our needs by offering this preferred stock to these impact investors. So that was very successful, and we've raised $5 million of that over time. So during our research of worker co-ops, we discovered, wow, there's all these different types of cooperatives, right? One of which is a purchasing co-op. So in August of the same year we converted Namaste Solar to a worker-owned co-op, we launched a purchasing cooperative. We named it Amicus just because, you know, being amicable toward each other, so it's the Latin word for friend. And we had reached out to other folks that we were close friends with in the solar industry that were already running solar businesses in different parts of the country. And we knew by working together, we could be stronger together, right? We could pool our buying power, but also share best practices and learn from each other and support each other in many ways. So one of the best known purchasing co-ops here in the US is Ace Hardware. And it's I like to say we're like the Ace Hardware of solar, because each of those hardware stores are independently owned and operated, just like the Amicus member companies are. And they are co-owners of Ace, so they can compete better with Lowe's and Home Depot down here in the States. But as you know, there's hundreds of these purchasing co-ops across multiple segments of the economy, right? There's roofing, plumbing, HVAC, you name it, carpeting, etc. There's even one in the turf industry that supports golf courses, independent golf courses. There's ones for veterinarians, right, and pharmacists, etc. So it's a really proven, time-tested business model, the purchasing co-op, and we felt very confident of just applying it to solar. And so far, so good. We've thoughtfully and carefully grown it. We've only added companies that kind of meet our sort of due diligence of excellent reputations, financial health, right, longevity. The average age of the Amicus member companies is 19 years in solar, which is actually pretty long here. And across all the 76 companies, there's around 4,300 employees, ranging from installation folks to project managers to designers, right, engineers, salespeople, marketing, IT, accounting, you name it, HR professionals, etc. So, and out of the 76, there 25 are certified B Corps or benefit corporations, and 19 are in the process of being assessed by B Lab. 19 of the 76 are also currently employee owned, and it's a mix of restricted stock plan to worker co-op to ESOP. So there's a range in there, and then 16 are currently in conversion. I was actually just up on Friday helping one of our members present to their team about converting to a worker-owned co-op. So that was a lot of fun. So let's see, purchasing volume obviously matters. So we're trying to balance this, right? Cultural fit, great solid company with, can we get enough volume to get the price discounts we want from the global manufacturers that we're negotiating with, right? So this past year in 2022, we did close to $260 million in total purchases, and we're targeting $500 million or $500 million in a few years by 2025. And we feel like that's a big enough share of the market to get us exactly what we want in terms of pricing and support and service from the manufacturers. So there's kind of three main buckets. Member benefits, there's, like I said, the discounts, but then there's rebates, there's better support. There's also the knowledge sharing, right? We have multiple retreats a year. Next month in Denver here, we're getting together all the salespeople and marketing people from across these 76 companies to share and learn from each other. And so we curate an agenda around that, right? And bring everyone together for that. We have our manufacturers sponsor those events, so it covers the cost of dinners and the space and everything. And then a big thing we started in 2019 was policy. So many of you probably know here in the States, President Biden signed last August the Inflation Reduction Act, IRA, which is historic, unbelievably historic climate legislation. And we were heavily involved in that. In many ways, Amicus was kind of the voice of the smaller distributed generation solar business. There are lobbying groups based in DC that represent the interest of large utility scale developers and integrators, but we were kind of more of the smaller business voice, and it really resonated well across both sides of the aisle, both Republicans and Democrats. So that was really successful. And I forgot to mention the 76 member companies, they're spread out and building projects in all 50 US states. And so that allows us to do these policy action alerts where we activate these small business owners to call their members of Congress, right, and write them or write op-eds. And having constituents speak up and have their voice heard is really powerful, as you can imagine. So the main capital source was just it's each share of common stock is $10,000. I mentioned Namaste Solar was 5, so the Amicus is 10. And so with 76 members, right, there you go, 760,000. And yeah, that's a little bit about Amicus. The Amicus members as a core, obviously, with all the sharing and learning from each other, we're discovering these pain points in the market, right? And one pain point we saw was all these solar PV systems are, spread out across the country, and maybe an asset owner owns a project in Minnesota, one in New York, one in California, one in Texas, and they're trying to hire an operations and maintenance specialist that can serve and maintain those power plants for them. But it's kind of like you got to put your technicians on a plane, right? Techs on a plane, like flying around to all these plants. So we thought this is a great application of the cooperative business model in terms of resource sharing. So we won a Department of Energy Sunshot grant founded Amicus O&M Cooperative in 2016. So this is a standalone separate cooperative. So like Namaste Solar is on its own, Amicus is on its own, and Amicus O&M is on its own. And they have 34 member owners right now. A big thing they're doing is actually developing deep training, video training and in-field training for O&M technicians, which is invaluable. It's pretty nascent in terms of the training resources. And so having that as a resource for the members is one of the biggest benefits to being a member of the Amicus O&M Cooperative. And these members have, right, these long-term preventative and corrective maintenance contracts for now, I think it's over 2 gigawatts of systems across the country. And you can kind of see the grant amount there, 360,000 from the U.S. Department of Energy for that Sunshot Award. And then also it's each share of common stock for Amicus O&M is $5,000. So 34 member companies times $5,000 is how you got to the 170 in member equity. Another pain point we saw here, at least in the US market, I don't know if it's in Canada, but in the US, there were essentially these tech, fintech platforms that were being developed to offer long-term residential loans for a homeowner to go solar. So here's a 15, 20-year loan, right, at a low interest rate, and that loan will just be for the solar and pay for it on your roof, right? The problem is they built in these large fees. They're called dealer fees that made it very expensive to do these loans. So it was kind of like baked in to the cost of the system. And we just that's got to go. That's not going to work well long term. That's not sustainable. And there's other options. And we found the financial cooperative model through a credit union as that answer. So we got our charter in 2017, and this is again its own, entity, standalone entity. It's a 501c1 here in the States, and it serves all 50 states. It has an associational bond, which some of you who know co-op credit unions and co-op speak, what that means. It means, you have to be the members who bank at the Clean Energy Credit Union have to be a part of certain associations to be able to bank there. A lot of credit unions, you have to either live locally within a certain geographic area or work somewhere or worship somewhere to be a part of that cooperative. and that credit union. But in our case, it's associational, so you can serve members across the United States, all 50 states. And yeah, currently it's growing well. It's ramping up pretty quick with lots of loans and lots of deposits coming online. So, and it's not just solar loans we're doing, right? It's checking and savings accounts, CDs, it's money market accounts, it's loans for electric vehicles. There's actually a lot of Tesla Model 3 loans in there, you can imagine. And the main capital source to do this were donations. So we had $3 million in donations to support us there. And really a lot of these donations, the main reason we received this money from certain foundations, they were hoping we could act as a catalyst for other credit unions to follow, which we want to. So it's that ripple effect, right? A lot of credit unions, which are a lot bigger, right, than 25 million assets, right? There's multi-billion-dollar size credit unions out there. We want them to see what we're doing by originating these solar loans and do the same thing, right? To help increase the amount of deployment of solar energy out there and reducing those emissions. Let's see. So in the backdrop of all this too, is we started in 2005, essentially a real estate holding company to actually own the buildings that Namaste Solar was operating out of, and converted it to a cooperative in 2019 and named it Kachwa Impact Fund. Kachwa is a Nepali word for turtle. And so it's kind of like this idea of slow money, patient capital. And we've grown it significantly. It's very much like, think of it as a REIT. It's very similar to a real estate investment trust. So 60% of the assets or more own real estate. We call it impact real estate because the real estate is owned and the management of that real estate is shared by the tenant who's doing social or environmental justice work. Or it's a tenant, right, who's operated by a BIPOC owner of a business or things like that. And we want to support them and them to not worry about their rent going up or the building selling and them getting kicked out or things like that. They can kind of control their real estate destiny, if you will, by being a partner with Kachwa. And then actually the ownership, the equity of the building transfers to that tenant over time as well. So there's a very significant upside to partnering with Kachwa and co-owning essentially the real estate together. So that's a big part of what we do with Kachwa. We also invest directly debt or equity into impact companies. And there's I think I have a list of the kind of impact themes here. Yeah, you can see here. So covers quite a swath of opportunities. So like we might lend our focus more toward impact companies that are doing renewable energy, are already certified B Corps, they're cooperatives. It's kind of like that double, triple, quadruple word score, right? If they can check as many of these off, that's obviously gets our attention in terms of companies we want to partner with. So here's some examples of investments we've made. And some folks on our full list of the portfolio of investees can be found at kachwaimpactfund.com. So you can see more about that. It's changed quite a bit. There's actually a pretty small list here. But the idea is these are all working together, right? You've got this work cooperative and Namaste Solar. You've got the purchasing cooperative that is supporting Namaste Solar by lowering its cost of goods sold. You got the resource sharing cooperative that's synergistically working with Amicus and Namaste Solar. You got the financial services cooperative supporting Namaste Solar and the Amicus members with lower cost loans to then help their homeowners have a lower cost to go solar. And you got the investment cooperative supporting maybe the real estate of some Amicus members, but also making direct investments into other companies not tied to Amicus or Namaste Solar. So, and we're considering starting some other cooperatives as well that would tie into this network, but kind of like overlaps and feeds on itself and forms this nice ecosystem that works really well together. So you got some overlapping membership. You've got new members from customers of Namaste Solar going to the credit union, and from the other Amicus members, you've got Kachwa investing in some Amicus members, helping them, for example, convert to employee ownership, or helping them control their real estate destiny, etc. But essentially, like, I think this is kind of a take-home message for like developing these. You want to look for what's missing in some cases. So like with capital providers, yeah, you want to find where are the pain points with this. Is it real estate? Is it senior secured debt, or revolving line of credit, or things like that? There's a lot of support out there, right? There's co-op developers, incubators, accelerators. There's a professional group of attorneys and CPAs that get together actually quite a bit, that are all focused on forming cooperatives or helping them convert to work around co-ops, etc. There's tax specialists, right, like Wagner. And then, there's these forums out there, as probably a lot of you know, that really focus on cooperative supporting other cooperatives, which is the principle 6. Yeah. Great. Well, thanks for having me today.
Yeah, thanks a lot, Stephen. That's really great. So in a short bit, we're going to go in groups for about 10 minutes, and Stan's going to be sharing questions we're going to ask in those groups. But before we jump into groups, I do have a bit of a just a hot pursuit question for you, Stephen, because I know we've discussed this, and I think this is so we're trying to sort of consider connecting renewable energy cooperatives in the Canadian context, and you've had a lot of success in the American context. What would you say would be, from your, this is a bit of an unfair question, but from your understanding of I guess of Canada, like what would be like a good first step, you'll say, to sort of move along that path? Like what's like a starting place folks should think about?
Starting place to form a specific cooperative, or you mean a network of cooperatives, or what?
Network of cooperative, or scaling up? Yeah, not a specific cooperative.
Or scaling up, yeah. I think the first thing you want to think about is there a problem or an issue you're trying to address that the cooperative business model would serve well, right? So if you notice, a lot of what we had done was trying to address an issue. Like with Namaste Solar, it was, we believed in democratically run and operated businesses. We didn't want a CEO with full control of the business, and that's obviously why we did the work with co-op. With Amicus, we were trying to solve, how do you get national scale and scope without having to sell out and be part of a roll-up with private equity or something like that. With the credit union, it was trying to solve these high dealer fees from these fintech platforms. So my question is, like, are there existing issues in the Canadian market, right, that a cooperative business model would be good to apply to solve? Would be something I would, so it's almost like taking a step back first. It's zooming out a little bit and not just assuming, we want to run before we crawl or walk. Yeah.
It sounds like you're being clear about your purpose as well.
Exactly. Your why. Yeah. Make sure you understand your why. Yeah. And I just want to give a shout out to Julia. I see you in the chat there. It's so great that you're on this call. And Julia was amazing to work with. She's the author of the article you had mentioned, and she is an expert in this field for sure. So it'd be great if you could have her on maybe in the future if you haven't already.
Yeah, thanks, Stephen. Thanks, Julia, for joining us and being generous with sharing your contact information. So Stan is going to put everybody in groups, and there'll be sort of 3 questions. What ideas did you find surprising about Stephen's talk? What are the multi-stakeholder network opportunities for renewable energy cooperatives in Canada? And what are the threats to the success of multi-stakeholder networks in renewable energy cooperatives in Canada? So we're kind of trying to take Stephen's talk and get to a little bit of your point there, kind of Canadianize it a bit. Like it's a lot of success in the American context. What could that possibly look like? What would be the challenges in the Canadian context? So very much to the point that you're bringing up. Okay, hello everybody, welcome back. Zoomed back in as a larger group here. I hope you had some good discussions. We had a really nice discussion with our group. So we have about 20 minutes here to perhaps provide comments, ask more questions of Stephen and some of the experiences that he's had. Even I know Julia, the person who wrote the paper, perhaps you have some questions about that. And Marc-Andre is going to start us off.
Okay, thanks, Martin. Yeah, we had a really great chat, and of course got cut off the time constraint. But one thing that occurred to me as we were chatting was the market structure. I was wondering if you could, Stephen, you could describe the kind of context in which you were operating. So in Saskatchewan, we have a state-owned energy supplier that really owns everything, right? The grid and the production, and it makes it challenging. And that's often the case in many Canadian provinces. It seems to put a brake on things here. I don't know if you have an analogous situation, or if you can just give us some of that context and how it played out for you.
Yeah, in the United States, it's way worse. Yeah, there are thousands of, investor-owned utilities, municipal utilities, co-op, rural electric co-op utilities, multiple different authorities having jurisdiction that you have to get permits approved from, and so it is a complex thing to get, and I'm speaking mainly about larger solar projects interconnected with the utility grid. It's very challenging. What's also happening here in the United States is there's actually a movement against solar farms because they don't want the landscape to be, in their opinion, impacted, and thus their property values go down. So imagine a neighbor farmer, agrees to lease their 10 or 20 acres for a solar farm to be built on, right? The rows of solar panels. And there's a big pushback in the local towns, right? And town meetings that never has happened before. And it's actually kind of it's interesting. We're trying to figure out what's going on because this same group of people are going around town to town and disrupting town meetings and pushing back against, solar farms and saying no to it. And usually when the town trustees or board asks, like, hey, where are you from? They're like, oh, I'm from, doesn't matter. I'm not from here, but I'm from somewhere else. So they're traveling around to push back. So it's both the, there's like a community effort against solar farms, but then there's also the interconnection permitting constraints, here in the States. And then we also see, even on the homeowner scale, California just changed their net metering law significantly, right? Where it reduced the net metering benefit to homeowners going solar by 80%. 80%. So it's in that, California typically, what they do in California typically cascades and ripples across the different markets in the United States. And when I say market, it's typically like a state market because it's governed by the state public utilities commissions. So it's challenging. Yeah, for sure. Yeah, I forgot to mention, like, it's hard enough to kind of run a worker-owned, employee-owned business, but then to try to do it in that context, right, of such a complex, challenging, brand new energy industry. We call it the solar coaster. I was telling folks, because you got to go up and down on the roller coaster ride, and you got to be willing to,
I'll just jump in, then I'll move along. But it reminds me, in the early years, a lot of cooperatives met with stiff resistance from established businesses who would set up lobby groups and actively campaign against the cooperative sector, wherever it was, in retail or farm or wherever. So maybe you're getting a bit of that. It might be a sign that you're actually having an impact. Or it's not. This is more general. This is more general. This is not about you so much. Is that right?
Yeah, I would say no. I've not received. I think, if anything, any type of reticence to welcome in the cooperative model, it's been more about education and ignorance around the cooperative business model. And Julia, I see you nodding. Yeah, it's more about that people just don't understand the model at all. Not so much they're against it; they just don't know about it. I was more describing, in answering your question, like just the pushback against, right, solar. Yeah, specifically. Yeah.
Yeah, thanks, Marc-Andre. I have a bit of a follow-up to that, but I want to kind of keep it open for other folks that want to sort of jump in or have any comments or perhaps questions for Stephen. And I'm putting Julia in the spotlight as well too, because I know she's we're fortunate to have her here, so we can benefit from some of her insights as well.
Thank you. I feel really happy with the invitation that was forwarded by Karen. Just a brief introduction about myself. I'm Julia Martins, and I'm a researcher at the International Center for Cooperative Management at the St. Mary's University. And I developed that paper with Professor Nathan Schneider during the time I was a visiting scholar at CU Boulder, researching the clean energy industry and cooperative networks. And I was exactly interested in how we can scale cooperatives because, like Stephen said, there's a lot of misconceptions about the model, and a lot of people outside this movement think cooperatives are just local, small organizations that are not able to create impact on scale. But when we really start looking into it, we can. Not only we have examples of large cooperatives like Mondragon and vast cooperative ecosystems like Emilia-Romagna, we do have also those emergent networks that are happening in other locations, and more we can tap into this on how to create those networks and how we can create impact through cooperative networks and complex networks when we bring together different players developing different functions. And the message that what I understand from Colorado specifically and the Namaste network is that they brought together all their advantages, the advantage of being a co-op-friendly environment and having enabling legislations. They have like a great weather with solar energy, sunshine almost 300 days a year. So they took advantage of everything they could, and whatever was a disadvantage, whatever they didn't have to thrive, they created. And that's how the network is opportunistic. They identify their pain points and created new cooperatives to solve those problems. And I think that's the message, that regardless where you are, you can create a network by identifying your strengths and creating cooperatives to solve certain market pains and be successful in creating impact.
Dion, thank you, Julia. That's wonderful.
One of the things that came up in thank you, Stephen, and also Julia for your presentation and comments. I'm really looking forward to read the paper because I haven't yet. One of the things that came up in our group was this question about the level of formality. So in the business literature, right, there's discussions about when there's inter-firm collaborations, right? And to what extent, like, can it be networks? Does it have to be contracting, kind of more formal joint ventures? In Western Canada, we have, you know, the local retail co-ops in the cooperative retailing system came together to form their own cooperative that they jointly own. I think what's really interesting about this space is, and Karen Miner brought this up, is that there's probably lots of different ways that co-ops can cooperate, or that businesses can cooperate in a cooperative fashion, that maybe it doesn't always have to be sort of rigidly thought about in the way we think about a co-op. And I think that if you sort of think about that continuum of sort of formal to informal partnerships, like and networks, I think it raises a whole variety of other kinds of forms. So we don't kind of get stuck necessarily in thinking that there's only one way to do things. So I think that that was a really interesting part of our discussion. So thanks to my group for that.
Yeah, any comments to add, Julia or Stephen?
Just to mention, just at the levels of how formal or informal can be a network. Just want to point out, this is a very informal network, or it started in a very informal way through the relationships of early Namaste employees. Stephen and Blake Jones, Amanda Bybee, they were all co-owners of Namaste Solar in the early days, and nowadays they are head of those new cooperatives, and those relationships remain, and they lead into such a vast network with such a vast impact. And what is started with personal relationships created like a really unique contractual framework. They're not exactly all connected into a single framework, but they establish their own connections between organizations. But on the bottom of that is those personal relationships And that's how it starts. And cooperative networks start with those collaborations and those personal relationships. And that's the driving force.
Yeah, no, just that's exactly right. That's well said, Julia. And we've expanded that, you know, those personal care and love that Blake and Amanda and I have for each other. That's what we've expanded across all these amicus members too. Like, you should see this group together. It's amazing how open and transparent and vulnerable they are with each other and how much they're learning from each other. It is powerful. And I think that's where the magic happens, right? And that's where they can really get to the heart of things and support each other in many ways. So it's culture. It's culture building, right? That's it.
Yeah, I like this point about the sort of softer, you know, the well, not so soft, but this other kind of dimension, culture building, relationship building. I hope that's what we can foster with our Ottawa event. It's not to shamelessly plug it, but I am plugging it. That's very much part of the spirit of what we're trying to do is really form strong relationships and let that be the foundation of something that can be flourishing, you know, past just this event that we're doing. Any last questions or comments from anybody?
Martin, can I just make a quick comment? I just wanted to pick up on that last comment from Stephen, and Julia was saying as well. Just how many times would you hear care and love put in a response when we're talking about, you know, something like business? But that, I think we just don't want to lose this, like that people-centeredness, the relational aspect, because also in the renewable energy co-op space, feels to me in Canada that some of it has been built partly on a transactional perspective. And so we don't want it to stay there, and we want it to be transactional and relational. And, you know, that co-op piece is so critical. So anyway, Stephen, just when you said care and love, I just had to pick up on that, because how many times do you hear that when you have like a business webinar about, you know, solar business? So thank you.
John, I'm sensing that you have a hot pursuit there.
Yeah, so Karen's comment is really like, because I had the same thought when Stephen said that. But I also, like, my struggle has always been in this space is, you know, like, as co-ops scale, right? Or as they sort of like the way they scale or how they scale, or as they get bigger, sometimes like that relationship component gets lost, right? Because there's like, you know, the sort of the connections to people, how it's formed, that kind of thing. And so this has always been for me, the big source of the tension in cooperative scaling, right? Is that as you scale, you get more people, you lose that sort of the love and trust that happens. That's why you would put in so much money with these people you know well and trust well. So I'm just like, I always think that that's the tension actually in the scaling piece, is that you lose some of the, like, what we think makes a cooperative, but maybe there's other things that make a cooperative that aren't just that, and you can build it into the culture. Or anyway, I'm sort of rambling, but I think that's the tension point for me.
Yeah, I couldn't agree more. And the main feedback I've gotten from the amicus members is why to not grow too fast is because they don't want to lose that intimacy. They don't want to lose the intimacy, right? Like they want to keep those strong bonds. So yeah, we're having to get creative on how you still maintain that strong bond with each other, but also scale. And it's a balance for sure. Yeah.
And when we've had the phone chat, we discussed that a little bit, that sort of tension, and it's been something you've had to wrestle with quite explicitly, right, Stephen?
Oh yeah, for sure. Yeah. And the way we're doing it is we're kind of we're breaking out into smaller peer groups, and just being more creative in how we create the forums to share and learn from each other. That's allowing that deeper connection, and then having different times of the year where we're getting together all as a group, et cetera. So we're kind of blending different tactics, if you will, around sharing and learning that allow us to still grow and scale while keeping that intimacy. Yeah.
Martin, can I jump in, because there might be some instructive learnings from the history in this case, like in the credit union sector, and I can speak about Saskatchewan with some knowledge. They actively stitched in social activities all through their networks, right? So everyone knew each other, even though they lived 1,000 kilometers away from each other. They didn't have modern, easy transportation like we do now. They had curling tournaments, hockey tournaments, baseball tournaments, socials, dances, and then they did work too, right? But there was always this kind of very intentional socializing process that not only enriched people's lives, but was a good mitigation of credit risk. People knew each other and they knew who was risky and who wasn't, who they could hire to bring in and help them. Those kinds of networks, informal, also fun-based, can be really, really important. I think we often lose sight of that.
Yeah, thanks a lot, Marc-Andre. Unfortunately, we're just at the hour, but thank you so much, Stephen, for being generous with your time and sharing some of the work that you've been doing with multi-stakeholder networks and cooperatives. And I think it's really helpful. And I think this is a really great message to end on, with relationship building and fostering connection. That's part of what this is about. That's part of what our event is about. That's exactly what we're trying to do. So thank you for reinforcing that. So let's give a big digital thank you to Stephen for his time in the presentation. And the fun is not over yet. We have another presentation coming up May 17th, so stay tuned for that. And this recording will be made available so you can cancel your Netflix subscription and watch reruns of the Renewable Energy Cooperatives discussion series. So I look forward to seeing some of you next month. Thank you again, Stephen.
Great. Thanks, everyone. All right. See ya. Be well.